Yeah, I'm losing my
Visualize
edge.
pairs trades, Pete. We talk about putting on pairs trades constantly and correlations and in different markets within an asset class, outside of an asset class, to trade the relationship between. But a thing that goes misunderstood often is how to, think about these trades and how to visualize them. And I know a lot of platforms out there don't have, and it's
Right.
not that it's not that they're, bad or they haven't done the research or committed the resources. It's just like it's a niche thing that's kind of hard to
Sure.
do on the platform side. So we're going to hopefully help you to visualize this for yourself. And if your platform has the capabilities, we're going to show you what it might look like as well. First, I want to do some contextualizing, some exposition, if you will allow it. It's been a one-way ride for stocks in 2021. And this really stinks because you see the start here, and this is what you and I have kind of dubbed a head fake. And it was the same as the start of 2020, right, Pete, where it's like,
Yep.
man, the first day of the year, a sell-off, some movement in the stock market. Are we going to is this finally going to be the year of back and forth, and not a one-way ride here, like I'm saying? And so far, no, it's not.
No, we're seeing back and forth in a lot of different things. We're not seeing it in equities. It's definitely been, we've gone through 5 days now. You would have expected what we talked about, I think, at the beginning with the head fake. In other words, a move one way, then a move another, then kind of frenetic, quick moves that don't follow through. You really have to kind of take that little blip down that we saw out of the equation, and we've pretty much had one way action here.
Yeah, and it's rough because it's been one-way action for about the last 10 months. Right. And not to say that you haven't gotten some nice periods of volatility like you're seeing here in September, you're seeing here in early November. There's some back and forth, but yeah, you look at this, Pete, and it's like, man, I got one little blip here of back and forth action and then new highs in the equity markets. But in times like these, Pete, pairs trades are essential because look at this. This is two stock markets, both of which here from the small exchange have made new all-time highs this week here. And you look at this chart, Pete, so much more activity. And, we're going to get to what these numbers on the y-axis mean, how to visualize it and how to think about it. But first, just talking about a line here that shows opportunity or doesn't, isn't it kind of crazy that you look at these equity markets and you see lines like this, and then you go and you put them against each other, and this just looks like a much more intriguing roller coaster than the one that I just showed you, right?
Well, absolutely, because it gives you back and forth. It gives you kind of some boundaries to set some expectations and then help you with management. So, yeah, this is one of the reasons we go to these pairs that, and sometimes in related markets when there's not, I mean, do we call that movement parabolic? I don't know. It did have little back and forth to it, but really not material ones that it would have been very difficult to not just be in kind of defense mode for a lot of those moves. So this is where the importance of, if I can understand pairs, and I think up to a point, we would take people in previous years down this pairs journey, and we were always so happy when it was something like Canada and Aussie, because they were always 1-to-1. Yeah. And you could subtract one from the other. And that's the closest we could get to the world of let's make a pairs trade easy. And then when we started to add almost everything else, the complexity just became really heavy. And you could feel people, I like the proffer. I like the idea you're presenting me, Pete and Frank, but the complexity is really hard to digest. Fair enough. One of the things we've tried to do is make that complexity a lot easier. And I think this opportunity and the way you implement it really speaks to that. So I'm glad we're here.
No, yeah. And you nailed it here, Pete, that the fact that you don't have to deal with intricate ratios when you're trading small exchange products against small exchange products. And that's also going to do you so much help in the visualization process as well. It helps in the implementation process. Oh, okay. If I want to get long technology relative to this SM75, which is a broader market, then it's just +1, -1, and the price is the difference right here. And then on the flip side, if you're looking to long the SM75 and short the sticks, it's the same price. It's just the inversion of it. And that's because it's just the difference between one unit of those futures. And it seems simple, right? It seems easy. Anybody who's looked at, I'm going to buy a share of Apple and sell a share of Microsoft, and the pairs trade there is the difference between the stock prices. That's not how it works in a lot of traditional markets. Right. When you start to talk about interest rate pairs, there's a bunch of ratios, one, and then ratios that aren't 1-to-1, and then two. When you visualize those, you get these crazy numbers on the y-axis that don't mean anything. Right. When I'm looking at long one STIX and short one SM75, Pete, the difference here is all I'm worried about. And it's the difference, like we just said, that negative $420 or $420 is exactly what you're looking at right here. And when you buy sticks and you sell SM75, Pete, you're just hoping that this line, this price here, moves higher. Now, I will say that a lot of platforms don't have this functionality and don't have data for these products going back as long as we do here at the exchange. And so I can't blame the platforms at all for that. But what I will say is what you can do, and this stinks, because you and I, Pete, this is what we hate more than anything, is to ask traders to do extra effort. That's the whole reason for launching the small exchange, is so that they don't have to do extra effort. Right. But if you don't have visualization technology on your platform, to me, Pete, it's just a matter of being like, okay, I can look at the outrights themselves here, and I can see, oh, okay, on September 1st, this was priced at X. On September 1st, SM75 was priced at Y. The difference then was Z. And then what's the difference today, right now, is simply, the prices that you're seeing quoted in your platform, one subtracted from the other. And you can kind of get a sense that way of at least a couple of price points. But if you can see at least some of the pricing, all you want here, Pete, is this line. If you're buying STIX and selling SM75, you just want it to go higher, right? This negative 420 to go towards zero.
Well, and that's it. And, Frankie, I think we both got some emails this week. You're so spot on. What's great is if they are a ratio, and you get that wild looking chart you've mentioned when you do build ratios with existing futures, you can't equate movement of that visual to what is the dollar return. If one piece moves, I make $20 a tick. If another piece moves, I make $2 a tick. Well, how do I discern that? Here on a strict 1-to-1 pairs trade, where the key piece being that each one has an equivalent tick size of $1, going from 400 to 380 is as simple as just doing the math. It's $20. So you know what? You want to be able to keep yourself in that world of comfort. You're right. Not every platform will visualize a pair for you or visualize it in a way that maybe is optimal. But when you talk about lift here, you can always look at these two values. And honestly, you and I have combined been trading treasuries for 40 years. When we see moves in bonds and notes, and we have to back and fill by net change on the day and round approximately what the P&L is on that, it's not because we're not smart. It's just the challenge of the product construction.
It's here, so hard.
You can always look at two prices and do the math here. Hey, we just traded under 450 right now and sticks SM75. And when you come in the morning, you know exactly, just doing that simple math, where your P&L lies. I love that piece.
I'm glad that you just did that for the viewer, because I know we're not looking at Pete's screen, but I know what he just looked at was merely the two quotes of the two products. And so what you can do as well, if you don't have this visualization technology, is merely say Stix is right now priced at, $59.50. I write that down on a piece of paper. SM75 right now is priced at 64 even. I write that down on a piece of paper. If I'm buying 59.50 and selling 64 even, Pete, that means I'm buying negative 4.5 or negative $450. And it's just very, I once again hate to make people do mental math or do, physical math, but it is thankfully with these products as easy as it can be if you don't have that visualization. And on the flip side here, to conclude, Pete, if you're longing SM75 and shorting STIX, it's the same chart here. It's the same relationship. Yep. It's just flipped on its head. And what I'm looking for is this line to continue away here. And so you've got a market, Pete, in this pairs trade that is so much more opportunistic than the outrights themselves and equities themselves here. You've got a simple setup, which is one SM75 to one Stix. All you have to do is be like, all right, which side do I want to get on here? and then think about where I want this line to move. And then all I do, and it's so funny to advocate for this in 2021, but all I do is I write down my price of the long, my price of the short. Then I can quickly produce my pairs price,
Right.
and then say to myself, where do I want to get out for a plus or a minus? And it's so easy here with small exchange futures.